And today is well, it's December 5th, 2019, and we're going to take a look at the markets as we usually do. And we're going to begin with the euro, and the euro is trying to move upwards today, I mean. So what happened yesterday here is that the price traded above the November 21st high, and that effectively ended the downtrend that we were working with here. So we had a downtrend because we're creating lower and lower and lower highs, and we traded above it. So this is yesterday's low. And as long as you trade above that low, it's very easy to see, at least in the short term, you have creating higher and higher lows, right? So above that level, we may actually trade upwards. And you could, if you wanted to, go long. I would advise against it because we have an election coming up next week in the UK. And, last time we had an election, the pound, the referendum, declined about 3,000 pips. And the EURUSD declined with about 1,000 pips. So a third of the move. And what happens sometimes is that people don't want to take positions ahead. Sometimes they do. Right now, though, at least in the pound, they are taking positions. Anyway, long story short, it is possible to potentially buy again on the breakout here again, because then that might potentially be the beginning of a move to the upside. So that's possible. But realistically, how much higher is going to go? Maybe 1180 at best. So you need to weigh the pros versus the cons here. But yeah, short-term bullish about the December 4th low. If it does slide below this level, we'll probably go back down again. Maybe initially just going down to 110.33 or so down here, and then potentially lower, but within that range again. And I think if we do trade below yesterday's low, this will be the new trend defining level. GBP versus the USD. So we talked about buying on the breakout here. That's doing good. So the market took out the high. It's almost a target. And if you want to do something now, I think I would just look to book profits, if anything, because we already moved up quite a bit. So this will be a profit of about 119 pip. And at the same time, from that high to the most recent low, this out 249 pip. So one would only buy here if you realistically think we're going to add at least that amount, at least from a risk to reward ratio perspective. And so with that in mind, we can't buy here. We need to buy at lower levels, something like this level down here. If we would buy down there, put a stop loss just below the low, and we reach the high, you make a 1-to-1 almost. If we hit the May 2019 high, you'll make a 1-to-1, and obviously if we go higher, even better. Dollar yen. So this is the dollar yen, and yesterday I said that, or before that, on December 2nd, actually on December 3rd, I said this could slide a bit more. It did slide a bit more. Now we're back at the original entry. Because markets are the way they are, and I personally think we're going to see lower stock markets, even though the trends are bullish, I would be a bit careful. What you do, of course, is up to you. But I reckon that if one did buy here, we're pretty much back up at entry now. Gives an opportunity to get out of that trade. So that original entry, will literally like 10 pip difference. I'm going to get rid of that now like that. It does look like it wants to push a little bit higher. It does so. So most likely it will hit up higher. And then in the light of this strong slide, we need to rethink of where to buy. And that will be to buy a 108.9059, which we also talked about yesterday. Buying in this little space with stops just below the low. Because from that perspective, risk reward ratio is good. Then you have crude oil prices, which are doing fabulous. We talked about buying here. That would are great. And we're now at the take profit level. So this is time to close the trade and conclude, unless you happen to be very bullish, because right now it's within that little channel here. Eventually though, and I've seen it before, it just goes higher, and then suddenly the market is in some sort of a short squeeze where the market just push higher, and that could happen. So if you happen to be very, very bullish, one can always keep 50% of the position. But given that this market is you know, you have a bit of profit and then the whole thing sort of tumbles, have a bit of profit and the whole thing just tumbles. Let's just stick with the plan, and that plan is just to book profits up here. And then let's wait for that next tumble. If it goes down to 59.19, but does not trade below 55, then I think people are going to be buying here. Gold prices. Now this is gold prices, and I was bearish. So you might remember I was bearish from here. The market slid. That went well. I was bearish from here. The market slid. That went well. And then the last time we moved up here, the market just cut straight through this high, and the downtrend that we were working with was over. So you get two right, and then you can stop that on the last one. Rather typical, especially nowadays because the markets are just very choppy. Now looking at this right now, I think that we could probably, what can I say about this? I think here I want to wait. There's conflicting signals. Firstly, you have that big downtrend. Secondly, you have that little uptrend here, and then you have the big picture uptrend. And we did go a bit higher, but it's not that we surged. I think it would have been different if we went all the way up like that, and then maybe we could buy a dip like that. But the move was quite weak, and we're within that little channel here. So I wouldn't do too much here. I would rather just wait. There's a good chance this is gonna do something like it did last time, which is to sort of consolidate into a very narrow range or relatively narrow range, and maybe it'll turn into some pattern we can recognize, and then maybe we can trade a breakout. S&P 500. So the market did trade here, so we watched for quite some time, but as you know, a few days ago, the market traded below the trend funding level. Very typical. We're now back up at these levels, and it's definitely a bit risky to short stock markets. But the reason why I'm bearish from these levels is that if I put my channel on this English pitchfork, you can see that we're pretty much at these highs like we are here. And it's not just here, it's the German DAX, it's a bunch of other stock markets. And other stock markets that don't have this problem, like the Swedish stock market or the Taiwanese stock market, which all went quite high, they're all a bit overbought on RSI and so on. So what I think is interesting here is that I want to be bearish from these levels, because at least historically this little trend line has acted as some sort of resistance 1, 2, 3, 4 times so far, and I'm happy to be bearish from below 31.58.6. It might just do like this, up and then down though, so it's a bit risky, but I think the risk-reward ratio and everything favors the downside. What does not favor us is necessarily the short-term trend. Let's do like this. I'll just be bearish, and I'll give you some scenarios. There's some scenarios that may happen. Might be like this, goes up and then down and then up and then down. And then what happens here, so we have that, and then we'll have something like that. And then we can do bullish, bearish. But for now, the way I envision this is that it will do a bit like this and then down. And then from here, let me see, there we go. From here, potentially buy, alternatively buy here, and in worst case, buy here. German DAX, it's looking okay here. So a few days ago, I said this was an important level. Take that out and things turn bullish. Trade below it, it will turn bearish. We had a nice little slide. We're back up at that sell level. And here as well, you can see that we're pretty much far away from this upward rising trend line. And I think down here is far more interesting to get involved. Finally, let's take a look at the dollar index. I haven't done that for some time. So the dollar, this little pitchfork here made a decent job explaining the dollar, right? It helped us to understand this high, and it sort of helped us to understand this. The only issue here that we never really touched that lower level. This is not the best. It's not the best sort of channel. However, I think it's done a reasonably good job. And if we look at this today, we did trade below this low, we did trade below this, so it actually does suggest We might actually go a bit lower. Might be a false move, but it does suggest we go a little bit lower. So I do, just looking at this, you know, I think the dollar can weaken for a few more days. We have the NFP on Friday, of course, that could change that. We also have the Fed rate meeting next week that could change that. But down here at these lows, I think it makes a lot of sense to look to sell. And I'm actually working with the quarterly outlook for the EURUSD for the first quarter. And I'm going to say something similar. It's either selling where we are now, looking for us to go down, alternatively selling just the higher levels around the October 21st high. But I think as long as you trade below these levels up here, I think in the long run, you know, this downtrend that we've been working with should hopefully remain in play. Okay, let's see if you guys have any questions. We have True Invention. He asks about Euro Yen. We have Ashu asking about the Euro Pound, and we have Marvin say good morning. Good morning to all of you guys. So we'll begin with the Euro Yen. So the Euro Yen. This is the Euro Yen. And the Euro Yen, I thought it was going to be much lower by now, but it has not been like that. So in the short term, supported by that channel. Actually, let me do something differently so we save time. Okay, so this is a massive channel in the Euro Yen. You see we're overall a downtrend. So this one has worked quite good in, you know, figuring out if markets are bullish or bearish. And up until recently, from here, the system told us to sell, and we did go down. And now we moved back up to these levels here. So first thing we can say, at least from a pitchfork perspective, is that we're on the wrong side. We're actually outside of the pitchfork. So effectively, whatever bearish view we had here should be void. But the way the market works is that you need to give it a bit of time, unfortunately. So if you look at this, the first sell signal I had here was up here, and then the stop was lower to this level here. And then we went down, and then this is second sell signal around this area, especially here on November 27th. So we went up, and then the market moved lower on stock markets declining. And what is happening here is that the market is now swinging back up here. So what can I say? I think hopefully we'll get the stock markets starting to trade lower, because that's what we need. If that does not happen and the market trades above 102 and 113, then we might of course just spike a bit higher and then go lower. But it would probably at least tell us to abandon this view. So if one did sell here, it would tell us to abandon that view. At the same time, if one did sell here, probably time to get out there here. So look at 121.13. That's the key, I think, for this market. Let me see here. We got another question. Yeah, we've got a question about Euro Pound. So this is the Euro Pound, and this is the weekly chart. And we traded below this level here, which was the March low, actually. Usually when you take out a big level like that, the market is going to try to trade to the next level. So this is the December 2016 low. So what's happening here is that the market is getting very excited about the likelihood of having an election or the Tories winning. And yesterday I did an article about that. So there's a betting firm called S Markets, and they, instead of just giving you the odds, they just give you sort of percentages, which is quite nice. So okay, I actually forgot to add it. Let's go to this site. Actually, I cannot go to this site because it's betting sites are blocked on this computer. What's interesting, let's see if I can find the file though. Maybe I'll have it on here. Here we go, I found an image. Okay, I don't know if you can see this. Yes, you can. So you can see here in green, that's the likelihood of the conservatives grabbing majority, okay? Right now that's a 6.8% or 68.03%. Now up until I think mid-November, mid-October here, the likelihood of having a hung parliament was still quite high up until mid-October, October here, right? But then after from here, you get that switch. So there's not a lot of money betted here. There's like a 250,000, but you know, people can do arbitrage, right? So if this is widely off, you just go to Paddy Powers or whatever they're called, and you buy there and sell here, whatever, depending on which one is more which one is more off, right? So there's definitely some arbitrage, even there's not necessarily a lot of money here. It's just £250,000. But what it's telling us here is that people are getting very, very excited, and I think the Conservatives are going to win. However, just look back at what happened at the referendum in 2016. In the referendum, in the run-up in April, the euro pound was here and it collapsed over 400 pip, and then it went up, and then it went all the way down, and then it sort of crashed upwards. So I think here we're obviously taking out that level, people getting very excited about Conservatives, and if they win, yeah, okay, it's gonna be okay. So actually, even if you think they're gonna win, I wouldn't keep the position over the election, because what happens here is that everybody's getting excited now, so it's pushing down. It might continue for the next few days. Traditionally, you take out one level, you go to the next one, and if we use the weekly chart, because I think that's the only prudent thing to do, is that as long as you're below last week's high, we should be fine. And there's a few things you can do here. You can, wait for a correction, 50% correction to maybe 85.05, then sell for it to go to the downside. That seems to be what's dominating now. That will probably continue to dominate. But then when the election is out, unless you really, really know what you're doing, I will be just closing that out, because you can either win a lot and you can lose. You won't necessarily lose a lot. Actually, I'll take that back. Some of the brokers on the Scottish referendum and also on the Brexit referendum, what happens is that the spreads go really wide. So you might just be stopped out on that. The second thing is that platforms froze. I think it was a Scottish referendum. I was trading with a broker, and this is a few years ago, 2016, and I had a position on the referendum came out, and I can see the price move. I can see the P&L in my platform moving, and at one point I was actually stopped out. At one point I was stopped out, but I wasn't triggered. The position was, the stop loss was not triggered, and at one point I was slightly more loss than I wanted. And then after half an hour or whatever, they opened the markets again at that broker, and I could actually get out, and I was not stopped out, and I was in a less of a profit, of a loss. Now I can't remember what happened, but it could have been like an amazing experience, and then I would have probably remembered it. It wasn't that I made a lot of money. I think I was stopped out for a small loss or something like that. And that was the end of it. And that could happen again here. So, but if you want to take a gamble again and you think Tories will win, then maybe let it go up, sell here, stop loss on the other side. You just need to be aware that spreads will widen, platforms will freeze, especially if it's like a major disappointment. And I think the only thing right now, according to the market, which is not a disappointment, is a Tory win. Maybe Lib Dem win can win as well, so that could also be good. But you have the other one, which is the most likely. You get more fragmentation. So let's say, and then you need to have another general Brexit vote on Brexit. I think if Labour would win because of the nationalization and of water, broadband, and a bunch of other stuff, I think from a business perspective, not people perspective, but from a business perspective, the pound could decline, at least in the short term. And then, so those are the two negative scenarios, I think, for the pound. And then you have Tories winning, probably not going to be a big difference, but if they get a majority, they'll probably be able to push Brexit through. The pound might gain initially, and then the market will try to figure out what may happen. And then you have Lib Dem, which will be very pro-business. And that would probably cause the pound to gain the most, I think. You might say, why would that be the case then? Well, because what does corporations need? They need cheap labor and experienced labor. You can get that via the EU as well. You give you access to this big market with no tariffs and established established routes of doing business, which are already there. So that could be the other way. What am I gonna do though? I'm probably just gonna take it easy, have a something hot to drink or whatever, and I'm just gonna watch it on the telly with my family, and then that's it. I'm not gonna be holding any position in the spot market when that happens. Okay, let's see if you guys have any questions. Otherwise, I think we're gonna wrap things up. Let's see if this page loads. It always loads a bit slowly when you do a webinar. Okay, we're going to wrap things up. Guys, thanks so much for watching. If you have any questions during the day, just let me know. Have a great day. Thank you, and bye-bye. Cheers.